Buckle up, folks. We're about to take a wild ride through the world of auto stocks. Today, we're pitting two heavyweights against each other, Honda and General Motors. These aren't just car companies, they're global powerhouses that have been duking it out on the roads and in the stock market for decades. But here's the million-dollar question. Which stock is the better bet for your hard-earned cash? Strap in because we're about to find out. Let's take a quick trip down memory lane. Honda's stock journey is like a well-tuned engine, smooth and steady. The company went public on the Tokyo Stock Exchange in 1957. For Americans, the real action started in 1977 when Honda hit the New York Stock Exchange. Since then, it's been a reliable performer, much like their cars. The 1980s and 90s were golden years, riding high on the popularity of their fuel-efficient cars. The 2008 financial crisis was a speed bump, but Honda recovered faster than many competitors. General Motors, on the other hand, has had a wilder ride. GM's been publicly traded since 1916. Talk about a long-term investment. But the 2008 financial crisis hit hard, leading to bankruptcy in 2009. GM came roaring back in 2010 with a new IPO, one of the largest in US history. Since then, GM's stock has been on a roller coaster, especially as it shifts towards electric vehicles. Alright, let's pop the hood on Honda's stock and see what makes it purr. Honda's got diversification down to science cars, motorcycles, power equipment, and even robotics. It's like having a Swiss Army knife in your investment portfolio. Honda's reputation for reliability is harder to shake than a tick on a hound dog. This isn't just about cars that run forever, it's about consistent performance year after year. Honda's financials are as dependable as their engines. Solid balance sheet, manageable debt, and dividends since 1985. Honda's global footprint is impressive. Strong market positions in North America, Asia, and Europe mean they're not putting all their eggs in one basket. If one market hits a pothole, Honda's got other roads to travel. They're pushing hard into electric vehicles and autonomous driving tech. Ambitious targets to phase out gas-powered vehicles by 2040 show forward thinking. So, while Honda's stock might not be the flashiest, it's got the makings of a reliable long-distance cruiser. Honda's stock might not be the flashiest sports car on the lot, but it's got the makings of a reliable long-distance cruiser. Now don't get me wrong, Honda's stock isn't all sunshine and rainbows. The auto industry is more crowded than a Tokyo subway at rush hour. Honda's up against tough rivals from all corners, American giants, German luxury brands, and fellow Japanese competitors. And let's not forget the new kids on the block, Tesla and other EV startups. Speaking of EVs, Honda's playing catch-up. Tesla's got a big head start, and even traditional rivals have been more aggressive in their EV push. The global supply chain mess, especially the chip shortage, has been a real headache for automakers. This has put a dent in production and could impact profits. Rising raw material costs are eating into margins. Lastly, there's the currency risk. When the yen gets stronger against the dollar, it can make Honda's products more expensive in international markets. So while Honda's stock has a lot going for it, it's not without its challenges. Section 5. General Motors stock. The pros are at GM's got American muscle written all over it, an iconic brand with a loyal customer base. But don't think GM's stuck in the past. They're charging full speed into the future with a massive push into electric vehicles. They've committed to going all electric by 2035, backed by billions in investment. GM's financial engine is strong. After their 2009 bankruptcy and restructuring, GM came back leaner and meaner. They've been posting solid profits and their balance sheet is healthier than it has been in years. They've even reinstated their dividend. GM's tech play is impressive. They're not just building cars, they're positioning themselves as a technology company. Self-driving cars? GM's Cruise division is right in the thick of it. Connected vehicles? They're all over that too. This pivot could open up whole new revenue streams and growth opportunities. Section 6. General Motors stock. The cons. GM's road isn't all smooth sailing. Transitioning from gas guzzlers to electric vehicles isn't like flipping a switch. It's more like trying to turn a battleship. It takes time, and it ain't cheap. GM's pouring billions into this transition, and that's putting a squeeze on their finances. The competition in the EV space is fierce. GM's not just competing with traditional automakers anymore, now they've got Tesla and a slew of EV startups nipping at their heels. GM's legacy costs are a heavy burden. Pension obligations and healthcare costs for retirees are like an anchor dragging behind them. The cyclical nature of the auto industry means GM's fortunes are tied closely to the overall economy. When the economy's humming, people buy cars. When it's not, that shiny new Chevy can wait. So while GM's got plenty of horsepower, it's also got some serious obstacles on its track. Section 7, Honda versus GM, which stock takes the lead? It's time to pit these two auto giants against each other and see who comes out on top. In one corner, we've got Honda, the reliable, globally diversified player. In the other, we've got GM, the American icon, making a bold push into the future. Stability? Honda's got this one in the bag. Their diversified business model and consistent performance make them a steady Eddie in the stock market. GM, on the other hand, is more of a muscle car, lots of power, but the ride can be a bit rougher. Growth potential? This is where GM starts to pull ahead. Their all-in bet on electric vehicles could pay off big time if they play their cards right. Honda's moving in the same direction, but at a more cautious pace. When it comes to financials, it's a close race, but Honda edges out GM slightly. Section 8, the final verdict. Choosing your auto stock. Honda versus GM. Which stock should you be revving up your portfolio with? If you're the kind of investor who likes a smooth, steady journey, Honda might be more your speed. Their diversified business model, global presence, and consistent performance make them a solid choice for the risk-averse investor. On the flip side, if you're willing to buckle up for a potentially wilder ride with bigger potential gains, GM could be your ticket. Their bold push into EVs and self-driving tech could pay off big time if they execute well. Ultimately, the better stock comes down to your personal investment style and risk tolerance. If I had to pick a winner, I'd give a slight edge to Honda. Their stability, diversification, and global reach provide a solid foundation. But in the auto industry, like in the stock market, things can change fast. So whether you choose Honda, GM, or decide to keep both in your garage, remember to keep your eyes on the road and your hands on the wheel. Now, start your engines and happy investing.